Good morning, students, for the lovely session of SAP with Nagraj sir. Stay tuned. We are starting the class in 10 minutes. Nagraj sir is there. Sir, you can proceed with your class, sir. After 10.
Sure, Kunal, thank you. So, a very good morning and a very warm welcome, dear students. So, I see 28 attendees who have joined the session. So, as usual, we'll wait for the others to join. And in the meantime, please do post your questions in your Q&A section. Right, student? I would have muted myself, but I'm very much available. Right? Any questions, please share it. 51 students. Another couple of more minutes, dear students, and we will start. No questions, students? So we will start the session, students. Let the others slowly join in. All right. So let's have a quick recap what we did. Of course, I think we have a very detailed, what should I say, a recap pending starting from day one. Okay, but we'll finish off first things first, and then probably, okay, maybe tomorrow if I take up the integration, day after tomorrow we'll have the, what should I say, the detailed recap along with whatever questions you have. And also, I think day after tomorrow we are ending our sessions. So we will close off on a perfect note. Okay. Now, let me check what was there in slide number 658. Let's go back. Students, anything to be shown to you on the system? Anything you want to have? Anybody tried doing something on the system in the weekend? At least maybe say for 5-10 minutes. Not asking much. Only 5-10 minutes of your time during the weekends. Did anybody have an opportunity to get into the slides and or maybe say even the system? Did you try at least navigating in the system? Trying to open, close, and visit some of the areas which we have already done. Did anybody try? 658. Overhead order business case. We stop here, right? So, okay, let me have a quick recap of what we did, maybe say for 15 minutes, another quick recap of what we did. Okay, I'll start off from the asset accounting. So in the asset accounting, what did we see? We saw some fairly new concepts typical to SAP. Like say, what is a chart of depreciation? What is depreciation areas? What is depreciation key? Yeah. So what is the concept of account determination? So all these concepts could have been a little new as far as the asset accounting module is concerned, and do not worry, they are all typical to your SAP. Of course, it is not any special process which SAP has brought in. This was all being done even without SAP. But the main reason or the main motive of SAP is to automate your system, automate your account, or rather your organizational functionalities. So again, we are going to see the concept of the account determination when we talk about the integration concept. But we have actually reached a place where we are trying to understand what is our account determination. So you will see we have various account determination processes as far as the other integration modules are concerned. But as far as the asset accounting is concerned, we got introduced to a new concept called as your account determination. So simply said, what is account determination? Tagging your general ledger accounts to the particular functionality. Here, what is the functionality? It is your asset account. So we have studied the process of asset accounting in our integration partners, or rather, or implementing partners business. So we have tried to understand the process. We have constructed so many asset classes. So what is an asset class? One methodology to categorize, to classify your fixed assets. And here, please be aware that we are talking only and only about fixed assets. Clear, students? We are not going to touch any of the current assets. So what is an asset class? Grouping of the nature of assets which your implementing partner may be using in his day-to-day business. It could be your computers, it could be your computer furniture, your chairs, your tables, whatever. Clear? And it could be your uh, what's it? Your other furnitures, all right, your plant and machinery, your real estate, right? Now, so we also understood the process of depreciation, the why and the how of depreciation also we understood. So basically, you can tell the system as to what is the requirement and how your management wants to look at this depreciation. Yeah, depreciation, of course, it is uh, a process which has to be done as per the legal requirements of the Companies Act. That is a must and should. But apart from that, what other information you are drawing from this particular activity is how the consultant gathers the information of the business and accordingly tries to do it in the system. Clear, students? And now, what was the other thing we saw? So we saw that we have a standard chart of depreciation with your 0D or your 1D. Similarly, we saw a little deviation or the fixed assets being identified through a process of or through the methodology of numbers. And that we are we are okay with it. Just like you are identified in your company by your employee code. Maybe we saw even from the customers and the vendor point of view. Yeah. So here again, each kind of an asset is identified through a definite asset number, which is again consisting of two different areas. One is the main asset number. The other one is your sub asset number. So do we understand why SAP has given you the feature of the sub asset number? Now, we know the concept of now, at least SAP allows you to purchase n number of similar assets, meaning if I'm buying some 15 chairs or 20 chairs for my computer department, I do not have to get into the screen 20 times and then enter the acquisition. In one shot, I can mention that I am procuring 20 chairs. So what I'm trying to tell you is n number of similar assets. So this is identified or this is possible through the concept of your sub asset number. So your main asset number absolutely will not change. This is your main asset number, but your sub asset number is based on the number of assets what you are procuring in one specific transaction. Here, so suppose you purchase say 20. So your first asset will be 1, second asset will be 2, third asset will be 3, fourth asset will be 4. But the main asset number will never change. Yeah, students, did you understand? And this is exactly why SAP has given you the feature of your name and your sub-asset numbers. And as we know, we always maintain this number range on an internal category because we'll ask the SAP system itself to generate the numbers, right? So that we do not have to put in additional efforts for us to remember these simple things. Simple in the sense, I'm not saying from the conceptual point, but suppose if just try to imagine if you're trying to remember a 10-digit document number and tomorrow I am on leave and you'll have to take my place, let us say to enter a few invoices. Will I be in a position to remember where I had stopped? If you ask me what was the last document you entered on Friday evening, will I be in a position to tell you on a Monday morning? Very unlikely, right? Because I leave it to the system to do this job. Yeah. Now, so we went into the details. We went into this viewing of the asset master or the nature, the transactions in the asset through a transaction code AW01N, which is your asset explorer. Okay, similar to your document view FB03. So there we saw the document, and we also saw the transactions pertaining to a vendor, to a customer. Similarly, whatever transactions have occurred with respect to a specific asset can be seen in a transaction code AW01N, or some people are comfortable with this transaction code also, AR01, but it is basically your AW01N, which is your asset explorer. But obviously, when you enter into that AR01 transaction, that also will automatically take you to your asset explorer only. Clear? Now, so from how have you automated the whole process of SAP understanding what is the rate of depreciation, what is the methodology of depreciation? Is it written down? Is it straight line? Is it special depreciation? How are you telling all these important features of depreciation, or how exactly you want to, how exactly your business wants to see this, pick up this depreciation factor? So it is all contained in a very, very important configuration called as your depreciation key or your depreciation keys. So obviously you will have multiple depreciation keys based on the nature of the asset. So land and your land and building, your plant and machinery, your vehicles, your furniture and fixtures, whatever. They each one of the assets will have to be depreciated at different percentages. You don't apply a single percentage to all kinds of assets. Here, so where exactly is this particular information held in SAP? It is held in a entity called as your depreciation key. Clear, students? So we have already seen uh, the depreciation key. You remember LINR, DG20. I'll give you the examples. DG20, LI. Why I'm mentioning only these two is because these two were the depreciation keys which we saw actively in the system. You remember, students? Now, you want me to show it to them? You want me to show it to you? If people don't remember, you can ask me. I'll again take you into the depreciation key. I have no issues. Okay, I'll wait for your answer. Till then, I'll assume that the oral explanation is more than enough for you to recollect what we did. Clear, students? Now, coming to the how you execute the process of depreciation itself. One, you have four stages or four depreciation statuses. One is you can execute the depreciation in the planned run, meaning this is a periodical activity normally which is scheduled for the last day of the month. So through the depreciation area, through the depreciation key and the other settings, what the consultant would have created for asset accounting, the program calculates the depreciation on a periodical basis. Usually it is on the last day of the month. And this again is a scheduled program. Scheduled program in the sense, since it affects the resources of the system, of the SAP system, we normally schedule this in the midnight. So if it has to be executed on the 31st of December or say 30th of November, we always execute this on the 29th or the 30th midnight. We schedule this program and allow the system to carry. Okay? And this will be time tested even before we actually allow this to be scheduled. So it can be a planned depreciation run. It could be a repeat depreciation run. Why repeat? Assuming a scenario where you have already finished the depreciation for the month of October. Now we are in the month of November. So there seems to be some change in some entity or in some area of depreciation. It could be a depreciation percentage or it could be whatever. So this change requires me to execute the depreciation once again for the month for which the run is already being done. Yeah. So in that case, I repeat the process of depreciation by selecting the repeat option. Just hold on. Students, how many ever times I'm repeating, it is all worthwhile. Because each time I'm repeating, I'm adding some information, right? Accounting, financial accounting, fixed assets. You have periodic processing, you have your depreciation run, and you have AFAB. Can you see? Planned, repeat, restart, and unplanned. So repeat, you have understood the reason. But then why would SAP give me another option for restarting? Now, during the process of depreciation, there could be some technical snag. Some program or something would have stopped working. So in that case, the next day morning, you would come to the office and see that the depreciation run is not successfully executed. So what would you do? You would select this particular radio button and execute the process. You would restart the process of depreciation. Yeah, this is the typical reason as to why you would actually run the process in the restart phase. Here, your unplanned posting run. Your unplanned posting run is necessary when your management wants to have a look at the depreciation for the future period. Suppose, probably it wanted to make some adjustments. So it wants to analyze this area of depreciation. Yeah. Now, what would it do? Now, suppose I want to get to know the depreciation position as of 31st of December. Would the system allow me to do it? Yes. If I pick this up, if I execute the process of depreciation in the unplanned posting mode, yeah, SAP would give me the results of the future. Normally, since depreciation is to be carried out on a scheduled basis, it has to happen. The planned run has to happen on a sequential way. 1, 2, 3, 4. What is it? 1, 2, 3, 4? The months. First month, second month, third month, fourth month. But in the unplanned posting mode, what I can do is I can ask the SAP system to skip. And normally I would do it in the test run mode. Normally. So even when when I'm executing the depreciation in the planned mode, I always ensure that it is done in the test mode first, and after ensuring that the process of depreciation is successfully done, okay, I remove the test. I simply remove the checkbox. Remove the check. I simply remove it, and now the system is, or rather, now the system successfully performs the depreciation run. So for most of the sensitive programs, SAP would have definitely given you this feature of test, especially during the costing run, especially in management accounting, or maybe say even in your settlement. Whenever you want to settle, let us say a cost center, internal order to a cost center, or a internal order to a asset. Clear? So what happens? We always do it in the test mode. Yeah, and then are you aware of that? I think I showed it to you how the settlement takes place, the valid receivers, the senders and the receivers. Yes, I remember having shown it to you. Clear? So this is exactly what happens in your unplanned posting run. You can skip the periods in your unplanned run. It is simply an prior information for the management. Yeah. So this is as far as your fixed assets is concerned. Any questions, students? You want me to repeat any of the topics? Take a 2-minute pause. Try to recollect whatever has happened. Maybe even on Friday or whatever, as recently as Friday, or maybe say even any question, any topic. 2 minutes to regather your thoughts. I know it's a fresh Monday, and One more minute and we will restart. Absolutely no topics to be revisited, students, either on the system or maybe theoretically. All right, let me get back to the, I'll get back to my Excel sheet. So we also saw the process of reversing a document, right? So we saw the process of reversing a single document. And so we also understood there are two methodologies of reversing. One is the single document, the other one is multiple documents, individual mass reverse. And so we also said that it is very, very, very essential that the individual or the user performing this reversal activity has the necessary access to the transaction and also the prior approval for the whole process. He should be authorized to carry out the process or reversal. He should obtain the necessary approvals from his supervisors, from his managers. He simply cannot say reverse any kind of a document. And during the process, we also saw that SAP will also, right, will also ask you to enter the reason for reversal. So without which SAP will not proceed to reverse the document. And you're also given an option to ensure that you are reversing the only that desired document by having an option reference before reversal or say view before reversal. Yeah. So we could see the document even before we reversed it, just to ensure that you are reversing the correct document. Yeah. And basically, whenever we went into seeing of the document, we saw who had entered the document. And basically and logically, you are allowed to reverse your own documents if you are only an end user. If you are a super user, probably you can reverse the documents of your subordinates also. But if at all you are just an end user, you are and you have been given authorization to reverse the document, you are, or rather you can reverse only your own documents, not the documents which is being entered by the others. Clear, students? So we also saw what is this, how to view the trial balance. Clear? So we also saw that the program responsible for successfully carrying out the depreciation is your RAPOST 2000, RAPOST 2000. This is the program behind your depreciation. Clear, students? All right. Now, so we also saw the concept of how the consultant creates the balance sheet. So we saw a process, or we saw uh, the the financial statement version concept, where the consultant goes and creates the necessary items as desired by the implementing company. Yeah. So your balance sheet is designed on the, uh, of course, you will definitely have to follow the legal requirements, but apart from that, the whatever format or whatever uh, design he was following to report, you can use it, or you need to design as a consultant, not as an end user. The end user simply executes that particular financial statement version. That's all. Here, students. So we also saw that. So F.01 was a transaction code. And what was a program responsible? This was the program responsible for your financial statement version. I'll just show it to you. This is your financial statement version transaction code F.01. I've used the same. Now, if you go and see this, can you see this RFB 00? Clear, students? This is going to be the program governing your financial statement version. Yeah. Anything else which we discussed and mm, okay, let me get into uh, the concept of, let's get into the slides. Let's try to read them. So we have already got introduced to a concept of your internal orders, where your internal order is a temporary cost collector, not like your cost center. Your cost center is a complete owner of that expense. But here, your internal order is just a via media. You are storing that. It's just like your clearing account, right? So what happens? Your clearing account has that balance, and ultimately it transfers. That is the concept of clearing, right? Here again, your internal order is a entity which collects the cost on a temporary basis and finally transfers this expenses or whatever is a transactions happening for that particular entity or for that particular project. Now, typical example would be an exhibition, which is going to run for 1 month or 3 months or something. So finally, for the whole of the period of the uh, exhibition, I would temporarily collect all the costs, the stall rentals, the refreshment charges, whatever you are bearing for you to exhibit your products. So in that case, what happens? I do not want to account, or I do not want to frequently keep posting it into a definite cost center for two reasons. One is my cost center would not have been identified. Okay, maybe the requisite marketing team wouldn't have been sure of it. Okay, now, so in that case, what would you do? You would still go on with the exhibition and you would temporarily collect the costs. You collect the costs, and finally, whenever you are able to identify the owner department, the department responsible for carrying out this particular activity, you transfer whatever you had in your internal order to the cost center. So the cost center, what is a cost center? It is nothing but a department in your organization. Yeah. So you transfer, you settle. The process of transferring is called as settlement. Can you see this? I think we already saw that on Friday. You had the valid receivers, and where I took you into a place where you could budget, you could plan for a specific internal order. All these activities are possible in your internal orders. Yeah. Now, the most interesting thing in your internal orders is, let me just tell you, very interesting. Or as a matter of fact, any planning or budgeting activity in your management accounting or in your CO, C budgeting. See, there is something called as an original budget, supplement, and return. What are these processes? Something very interesting and something very typical to this particular internal orders. Not only for internal orders, but for the other CO activities also. See the original budget. Now let us say for the exhibition, I have budgeted, let's say 5 lakh rupees for the whole 1 month or 3 months or whatever. Now, on the 25th or the 26th day, I consume 80 to 85% of the budget. So what happens? I can check and immediately send out the emails to the required people who are included in your mailing list. Availability control. So you ask the SAP system to trigger mails and telling uh, the owner of that particular activity that you have reached 80%, or rather you have consumed 80% of your budgeted budgeted expenses. So what happens now? We are still in the 25th day, so I have one more week for the exhibition to go on, and I assume that probably I may require 25,000 rupees more. So what would I do? I would supplement. I would add the 25,000 rupees more in this particular feature, supplement. I add. So I add the 25,000 to the original budget. See, every activity in your CO, it will ask you for your controlling area. All right. So anyway, I don't have the data. So this is how and in the other scenario where you have budgeted 5 lakhs and on the 28th or the last day, you are still left with say 15,000 rupees. So against the budget, you have saved 15,000 rupees. Now, what would you do? You would return the budget, the remaining 15,000 rupees to the budget. So that 15,000 can get allocated to any other internal order for or for any other activity of your organization. So more importantly, you should understand how things are being made possible in SAP. You can supplement, you can return. Your short spending on the budget, you can return. Your spending over and above the budget, you can supplement. So all these concepts are possible in your CO. So we are looking at the internal orders. You can see the cost center also. In cost center also, you have planning, you have budgeting, see, planner profile. Clear, students? For everything you have your profitability analysis, your product cost control. Clear? So for each of the entity in your CO, you have this concept of planning and budgeting, and also the concept of supplementing, adding to the budget, or returning back or returning to the original budget. Your the left out funds, what you have saved on your internal order, you are returning. So was the concept interesting, students? This is very much possible. And you saw the options also. It is not that I'm telling you, but it is the system which is telling you that all these things are being made possible in SAP. You found it interesting, students? Any questions till now? Take 2 minutes to understand whatever has happened, recollect whatever has happened. All right. All right. Right. So any other point which I wanted to add? And the concept of internal orders is extensively used in your AUC students. Assets under construction, we use a lot of the internal order concept for us to achieve AUC. Clear? So that's the most practical application of your internal orders. And we also saw a small example of your trade fair or your exhibition, whatever. So simply understood, your internal orders is one entity in SAP which is used to temporarily collect some cost for a specific project. Short term, not a long term, because AUC is a long term. Okay, you cannot have one. So internal orders basically it is also used for critical concepts like AUC and also for your short-term cost collection processes or cost collection activities like that of your exhibition, trade fair, what. Yeah, let me go back. If we can check. So posting invoices to internal orders. How do you post invoices to internal orders? We have also touched this, but probably you would be, you would have forgot. It's obvious to this because since you, I, I assume that I may be wrong. Please correct me if I'm wrong. People who wouldn't have experimented wouldn't know how to post invoices to the internal orders, though I have already shown you the place. Now let us say I want to enter a expense pertaining to a specific internal order, which I have created for my, let us say a trade fair. So the process of internal orders, I'm not going to touch. Okay, I need to create an internal order, then do a lot of things, but I'm assuming that that specific internal order is already available. So what I would do, I would try to enter an expense to that particular internal order. So how would I do it? So I go to the journal voucher. All right. Now I'll enter the expense account here. Right. I want to tag it. I want to tag it to a specific internal order. And you see there is a order here. Press F1 and you will see what data you need to enter in that particular number, which identifies an order. What is an order? Order is an internal order. This is a place where you would actually enter the internal order. Clear, students? Let me just see if there is. This is a place where you enter the internal order. Is there any internal order? I don't think so. Let me just check. Type controlling area. Let me assume that I'm posting it in, I'm using the controlling area 0001 and I would extract just 10. See, there is something called as C projects, which some person has created. So I enter the order here. And this CPR1 is constructed here. It is no way the activity of an end user. The consultant would have created it here. So he would have actually identified the order type under which he has to create this particular internal order, controlling internal orders. So first and the foremost, he identifies the order master data. He defines the order. Clear, students? So there are lots of settings what the consultant needs to do. So probably I would assume that he would have put it in the capital investment order. 0650. See, there is something called a settlement profile, budget profile, planning profile. You remember we saw this? So the first and the foremost of this creates the internal order type. What was it? CPR1, dollar CPR1. Let me open another session. Just give me 2 minutes, students. I'll give you a break. AO23. See, that is 00001. So what was the order? Sorry. CPR, I'll copy and I'll paste it. All right. So this takes you into the nature of the order as an invalid order category. Okay, not a problem. There is a faulty creation. Okay, forget about it. So this is the way of you creating an internal order and using it in your postings. Did we see that? So I'm assuming that this is perfectly working, right? And I would use the order to book the costs against this particular internal order. And this particular internal order, I'm going to settle it to a cost center or maybe to a fixed asset. If at all I'm doing it for an AUC, I would transfer all these costs. I would accumulate all the costs in this particular order. Clear? And I would transfer the cost to the asset. Clear, students? Let me just check if I can. So you have the settlement profile, define order types, 0, 6, 0. I would take this. See settlement profile. So where do you see the settlement profile? I'll show you. Just 2 more minutes, students. I don't want to leave this just like that. Quite interesting. Where do you see the settlement profile? I'll go back. So what was the settlement profile? 50. Now let me just check where the settlement profile is. Commitments, actual postings, status settlement, settlement source, settlement, define settlement profiles, define, maintain. So 50 was our thing what we picked up. See, valid receivers. So if it is a cost center, I would say cost center is required. If I'm settling it against the fixed assets, I would say it is required. So all others, I would say not required. So this is the way I would route the execution of your internal orders. I would specify here how I can settle the internal order. Clear, students? If I talk to you something more, probably it could be a little confusing. I don't want to do that. So, Kunal, can we take a coffee break?
Sure, sir. By 12 or 14, we will rejoin.
12:15 we'll join. Okay. Yeah.
Sure, sir.
Thank
Sure, sir.
you. Thank you. So we will go on another one more minute and we will start. All right, we'll start. So we just understood the process of posting invoices to internal orders. So what is this process of settling? So just before we took a break, we saw the how the internal orders about the budgeting and the internal order types, right? So how do we settle the internal orders? Through the concept of or through the transaction code KO88. I don't know if I have to relog in. Let me find. Just a moment, students. KO88. So it will ask you obviously which controlling area. I would give 0001. So it will ask you what period you want to settle, and in our settlement rule we would have already set against what this particular internal order is going to settle. Is it a cost center? Is it a another internal order, or is it a fixed asset? So we have mentioned there in our settlement rule number 50 what we said, what I showed you. And as usual we have the testing. So this is the way you settle the internal orders. At the expiry of the internal order, you will see that the internal order needs to, after you finish the work with your internal order. Now, one more interesting thing is, shall I take, okay, KO02. I'm getting into the master data of some internal order. Let's check. Is not an internal order. Then why is it showing me like that? Again, it says it's not an internal order. Okay, I'll pick up some other controlling area. Let me just check. Because I wanted to show you some other important thing. Okay. No values. Hmm. Just give me a minute, students. I just wanted to show you the different statuses of, or the status of the uh, what are the different status of the internal orders. No help. Why? Surprising. Okay. Let me take another route. Let me try picking up a controlling, an internal order from some other controlling area. You have a settlement profile 20. Okay. See here, the status are available here. Now. Okay. Now, basically, whenever you create an internal order, I don't know if I'm adding uh, extra data, but whenever you're talking about the internal orders, you have in the first stage, it will be in the created phase. So in this created phase, you cannot use this particular uh, internal order for your postings. This has to be in the released stage. So released stage in the sense you are asking, or rather you're telling the SAP system that this particular internal order is ready to accept the transactions. So if it is there in the CRTD in the created phase, all right, and when it is in this released phase or in the release stage, then and only then your internal orders can accept the transactions. Now, once you are through with the internal orders, now you have finished. So when you want to close the internal order once and for all, without any future operations on that internal order, you change the status of the internal order to the TOCO, technically completed phase, or to the technically completed status. If it is in the TCO case or a TCO phase or the TCO stage, you cannot operate on the internal order anymore. You have settled. You have settled the internal order. That is the meaning. I actually wanted to show you all these phases, but I'm not able to take up an internal order and show you the statuses. Okay. Anyway, not a problem. If you have understood this theoretically, it is more than enough. And moreover, this was an additional information. I don't know if these information are available in your course content, but again, since we have practically used internal orders, I just thought, okay, let me add a couple of more lines on the internal order. Okay. Now, any other questions, students? No questions. All right. Now, let me go back to the. So this is your KO88 is the way you settle the internal orders. We saw that right now, right? Okay. All right. Overhead business. So please read them. Okay. It is try to understand. All right. nothing connected to the business. You always connect the concepts more, less of SAP and more of business. You talk about SAP only when you become experts, or rather say professionals in using the system. Yeah. So you should know each and every concept, and you should know what needs to be done, how and where. Yeah. Controlling processes data which comes from. So this was the first statement which I made. The CO module may sound a little more complex than that of the finance module, because here the transactions are not at all straightforward. They flow from the way you have set up the system through various ways, and sometimes it becomes a little challenging for you to understand the origin of this particular uh, internal law, or rather say of this particular posting. Suppose there is some amount reflecting in your CO area. It may be a little challenging as to how you may have to relate it. And now, since I made the statement, now, how does the data from your finance, the most logical of all the modules where the data flows from your finance to your management accounting, how do you set the things up? Now, basically, you set up the flow of information from the finance to the CO module as you did with the other modules. What are the modules that we saw now? We saw the AP and the AR submodules. We also saw the asset accounting submodule. So how did the information from finance go there? General ledger accounts. So here again, the flow of information from the finance to the controlling or to the management accounting side happens through the general ledger accounts only. The difference is you will have to define the general ledger account, which is a part of your operational chart of accounts, as a cost element. Now, just value in your controlling cost element accounting, you ask me, okay, let me show you the posting first. Just hold on. Just hold on, students. So I will show you what is happening in the system and go back to the story. All right. Now, I'm going to simply enter a journal voucher. So 404. So some expense account debit to bank for 1,55,250 rupees. So you get a message, normal message, GL account is relevant to tax. Purchases account is relevant to tax. So SAP is accepting it. So I can easily post it. Now suppose I want this purchase account to be always tagged to a owner department. Is it the assembly department which is purchasing, or is it the painting department which is purchasing, or is it the milling department which is purchasing? All are your cost centers. You would have defined your painting department, assembly department, all as cost centers. Yeah. Now, how would you allow this particular purchase of spares to be directed to a specific cost center? You would want to analyze, right? What has gone where? How much of your money has gone to which department? So in that case, don't you feel that this particular expense account should be tagged to a particular cost center? Now, without entering the cost center, I can proceed. I can post this document. But don't you feel that it makes more sense for me to, or rather for the user to enter the owner department for this? Now, how do I change the behavior of the system? Now, I will try to, I'm not going to save this. Now I'll enter the same entry. Now, as far as my construction goes, I have defined this particular purchase account spare parts as a cost element. Now just see the behavior of this. I would pick up this particular. See, this also is an expense account. That also is an expense account. Same purchase account spares. Now, so GL account is relevant to tax. Perfect. Now see how the system is behaving. It is definitely asking me for a cost object to be assigned to this transaction against that purchase account. So until and unless, and see the color, it is a critical error. Now you can see the details. It says, now that you have not defined a CO account assignment for the account that is relevant to cost accounting. How have I made this account relevant to cost accounting? By defining this as a account number is defined as a cost element, and hence it is relevant to cost accounting. How would the consultant define the particular general ledger account as a cost element? I'll open another session. Controlling cost element, master data, cost element, individual processing, KO01 primary, secondary. So whatever expenses you are directly able to identify a specific cost center and which you can allocate. Yeah. So there is absolutely no problems in identifying that this particular done by this department. So you have the allocation of costs. So through your primary cost element, see, it will ask me for the cost element, the controlling area. So now if I give the general ledger account valid fund, it is already defined. See, it says it's already defined, already exists. Now you want to see master data, display. See, I've created a new general ledger account 404010 as a cost element for purchasing of spare parts. And that is exactly the reason as to why the system is behaving like that. Clear, students? So I would define the profit and loss accounts as a primary cost element, meaning whatever costs are easily identifiable to the specific cost center. Okay. Now, what in case you're not able to identify? For example, your utility charges, the power charges. Would you be able to identify which department is spending how much of power? Yes, you can. You can have the plug points and all other things. But generally, if I say, if you can tell me how much of your house electricity charges, how much your room is spending, how much of the power is consumed in your room, would you be able to identify? And first and the foremost, is that information vital? Very, very necessary. You're more interested to know how much of the power you have spent. Whether it is room number 1, room number 2, room number 3, it's immaterial. So in those cases, but you will have to absorb the costs. The 10,000 rupees power charges, whatever you are getting, it has to be absorbed. You will have to spread those costs according to the products, because this also is one of the expenditure. So how would you do it? You would define them as secondary cost elements, apportionment, allocation, apportionment. This is your settlement and distribution routes in SA. Now, did you understand the difference between primary and secondary cost elements, students? Through the concept of your primary and secondary cost elements, you are letting the information flow from your finance to your controlling. Just a moment, students. Just give me a minute. Sorry, students. Okay. Now, did you understand how the finance module gets connected to the CO module? It is through your primary and secondary cost elements. So you know what you should what you should define as a primary cost element and what you need to define as a secondary cost element. Clear, students? And you also know how the system behaves whenever we are setting the general ledger account as a primary cost element. The GL account, purchase account is relevant to tax. Yes, perfect. See the light colored message, color of the message. Now, if you see this error, cost account, and now how do I ask this particular entry to proceed? I'll enter a cost center. Anyway, I'm not going to save it. GL account relevant to tax. That's okay. See now, SAP will not give me an error, but happily it goes on. See, against this particular cost element, which I have defined as a primary cost element, it is happy that I'm entering the owner department. Here, if this belongs, now say, if at all, I have no cost center to assign this to, this is an AUC. Okay, I'm incurring cost for an AUC. I assign this to an order. Instead of a cost center, I would assign it to an internal order. That also is okay. I can also assign this to a, say, network. Okay, WBS element. You go further. You see the brand network. So I can enter anything. Okay, provided it completes the information. Clear, students? This is how you ask the system to behave or tweak the system to behave in the way you want. See, the earlier cost element, which was also purchase of spare parts, it didn't ask me. But when I entered a GL account, which I had defined as a primary cost element, system changed its behavior. It asked me, or it prevented me from entering transactions without giving the relevant information. Clear, students? So this is your concept of your primary and your secondary cost elements. And this is the way the data flows from your finance to your CO module. Any questions out here, students? Take a breather for 2 minutes, digest whatever I have said just now, and come back to me with any questions. I wouldn't want to elaborate on the subject simply because more than appreciating the system, you would start feeling that the system is more and more complex. I don't want that to happen. Clear? So just to keep things very simple and just to make you understand how actually the system is designed. That is a whole purpose. Clear, students? Just take 1 more minute and I will talk to you. So I see no queries from the students. All right. Now let me go back to the. Let us spend some time on reading this. So you all know what is overhead. I don't have to lecture on that. All right. Product cost controlling. Yeah. So just in your free time, okay, shall we read this? Not a problem. Why hasn't it moved? Yeah. So let's summarize. I think we missed the previous slide. Let's see. Revenues from sales and distribution. Students, I would suggest please spend some time on reading this. All right. And try to do your best to understand. So this is going to be your summary, right? Wants to understand the organization units of management accounting. So we have finished this also, I guess. Organizational units, organizational structures, and your CO model. You can use the COPA analysis. And when this has to be used, you're talking about a structure called as your operating concern. Clear, students? Nothing if there is, you are not going to talk about your operating concern if at all you do not have a demand for your profitability analysis module to be incorporated. Yeah. So we are already very familiar with this. Something very similar to your company code in your finance. Okay. Actually, this business area is actually outdated now after your profit center accounting came into picture. But anyway, there are still some complex projects which still are using business areas simply because when you're talking about huge implementations like that of a public sector or something, changing over from a business area to a profit center is very tricky and very complex. Your reporting may go haywire. So that is why in some of the old projects which are complex, they have still retained the concepts of business area, but the other projects, they have moved over from the concept of business areas to the concept of your PCA, profit center accounting. Profit center accounting, cost center accounting, segment reporting. Yeah. So sales organization, purchase organization, they're all the individual building blocks for the sales and distribution. And see, as For each and everything, what you see, company code is the base. Company code forms the base. Clear? So now profit center accounting has taken over from the uh, business areas. Okay. Customizing your CO area based on your requirements. Let us see what the graph needs to tell us, and I will take you into the system. As I said, 1:n, n:1. One controlling area can have n number of company codes. Can you see this? But one company code cannot report back to more than one controlling area. Just like your company and your company code relation. Clear? So this is exactly what I was talking to you about. Please go through this. All right. Go through the slides and let me know if you have any questions regarding this. See, you can link company codes and CO areas to each other in different ways. Provided what is your basic requirement in concurrence, in accordance with your business requirement. See, if your financial accounting and controlling area perspectives are one and the same, you can assign one company code to one controlling area. Let me just take you. Okay, I will just make a note. Okay, I will take you. Maybe say after we are back from lunch, I will take you into this CO area and show you all these points. If you assign more than one company code to a given CO area, you can carry out what is called as your cross company code accounting, cross company code controlling. Yeah, I will show you where you need to exactly set all these things. Okay, that will be because I don't want to jump into the practicals, because if I follow that, if I go about in that flow, it will be continuous and the learning will also be good. So now before the break, I explain something, and after the break, I come back. Makes little sense. Yeah. Let me just read out the last point, which was it of any importance? Let me just check. You assign a plan to a company code, see? And therefore, inheritance, and indirectly you're assigning the plan to a controlling area, to the controlling area also. Did you see the connection now? So the plan gets assigned to a company code, and subsequently your company code is getting assigned to a controlling area, and obviously the plan is talking to your controlling area also. Did you see? Based on the valuation level. Should I tell you about the valuation level? Okay, we have 4 more minutes. let me spend some time on this. But again, this point is going to be repeated when I'm doing the integration principle. Integration with your finance and your material management model. Clear? Now, what is this based on the valuation level? So basically, you can valuate your materials at the company code level or at your plant level. Normally, we do it at the company code level because things could be flexible, right? But why do you do it at the plant level also is it has some business reasons. Okay, probably you may not be in a position to understand even if I give you a business scenario. Now, all you need to know, there is a concept called as valuation. You have valuation areas, you have various other concepts in your material management, right? So when we are talking about the integration, you would also see that the material can be valuated at the company code level or at the plant level. Yeah, as I said. So for various business reasons, you select any one of them. You can't have both. Yeah. Changes to assignments. Now I said SAP will not allow you or give you an option for deletion. And it is so very important when you're talking about the management accounting here, because the management accounting module is very sensitive. So did you see the impact or did you see the meaning of this? Changes to assignments are not a problem until and unless you have not created something or you have not transacted. I'll also add one more line. So once you have transacted, that is the end of the story. You cannot do anything to the assignment or to the setup. You cannot change anything. Just like you saw your posted document, changes are similar to that of your, and this applies so much, and the impact is so huge when you're talking about from the controlling area concept. Whatever changes you are making in your company code, or rather in your whatever you are constructing in your controlling area, is very sensitive, and the changes sometimes are impossible. Most of the times they are not supposed to do it or they are not supposed to have been done. But even if you have done something, and if the change pertains to the CO area, you can assume that it is going to be a very cumbersome job. Here, students. Kuna, can we break for lunch?
Sure, sir. Dear students, stay tuned. We will again rejoin by 2 o'clock. Stay tuned and stay sharp. Thank you, sir. Thank you, students.
Thank you, Kunal.